February 6th, 2025. Today was a triangle day for most of the day. And then obviously we got a large breakout to the downside and then it reversed back up. Usually when you get, a triangle day, you have to keep in mind that the first breakout is generally a pretty 50-50 bet as to whether it's going to work or not. So you have to be pretty careful if you're going to be selling these closes since, there's just only a 50-50 chance it's going to work realistically. I mean, it should get a second leg, but you just have to be very careful because, breakouts of triangles are in general pretty 50-50, per Al's book. Anyways, bar one, a bear bar with a large tail on the bottom. There's probably buyers somewhere below. You also have to keep in mind, if you look at yesterday, the past couple days, what do we have? We have a bull channel, all right? Oops, that's the wrong tool. We have a bull channel, and what are we doing here on bars 1 and 2? We're breaking out above the bull channel, and if when we're breaking out above a bull channel, what generally ends up happening? We generally end up testing the other side of the bull channel. You have to keep in mind, breakouts above bull channels only have, in general, like a 25% success rate, and that 25% is probably not something that looks like this. It's probably something that looks, theoretically more like this, lots of strong bull bars. So it's not really that great to be looking to buy. We're probably going to be sideways to down until we test the other side of the bull channel, which we did on bar 16. Bar 2, consecutive bear bars, good for the bears, and we are probably going lower, but still a big gap up, and overall a little bit of more bullish. We should go a little more sideways to down, but we've had a lot of rallying for the past couple of days, so I don't think we're going to go too far down. Bar 3, a bull bar closing near its high. I would not buy above 3. I'm going to compare taking this trade to a trade yesterday. It's not the same thing. Bar 8 yesterday was a better trade. This was a better trade than this. So I'm going to use it as a comparison, as a generality. It's not the same thing. This was a good trade. This is not. But what I'm comparing it in the light of is low probability swing trades on the open, and that if you're going to take low probability swing trades on the open and scalp out of them, and then the next day you take one and you lose it, well, the one that would have just made up for your prior 6 losses, you just lost. So that is the issue with low probability swing trades on the open and trades like bar 3. Bar 4, a doji bar, probably buyers somewhere below, scaling in lower. I don't know how much lower we're really going to go. Bar 3 is strong enough to get a second leg sideways to up. However, if you bought above 3, that's not good follow through, right? Look at the follow through we got. Again, better trade yesterday. But the fact that it was a better trade is probably even more of a reason why you need really good follow through here. You get good follow through 9. So now this really clearly needs a second leg. This, 4, does that tell you bulls were interested in buying? No, not really. If you're going to take low probability swing trades on the open, you can just Walmart trade them. So if you bought yesterday, if you took the trade and you exit at the end of the day, then whatever. If you bought this trade, you took the full loss because you're taking it and you're Walmarting every trade. But you can't scalp out of some of them and then not exit the other ones at break even. 5, a bear bar, but a large tail on the bottom. You can see the bulls disappointed who closed 3, disappointed 4, exiting during 5. 6, a big bear bar, trades below 1 and 2. We should get a second leg up. I'm not sure how much lower we're really going to go. 7, an inside bar, probably traders buying somewhere down here. I don't think we're going a whole bunch lower, but we probably need to test the bottom of the yesterday's channel. I don't think we're going too much lower because bar 3 is pretty big bull bar. So I think it's more trading range price action, and it looks like we're at the bottom of the channel. Bar 8, a big bull bar, but a large tail on the top, and then consecutive bull bars 8 and 9. We're probably going to get a second leg up from this, but I'm not sure how much higher. 10, a bear bar closing near its low. Do you sell below 10? There's nothing wrong with selling below 10. It's a double top, or you triple top, head and shoulders, 1, 4, 10, but it's a swing trade, so it's just not necessarily high probability. 11, consecutive bear bars, good for the bears, 10 and 11. We're probably going to get a second leg down. 12, 3 straight bear bars, 10, 11, 12. Again, I am expecting a second leg sideways to down. But 12 not closing below the moving average, I'm not that interested in selling. 13, an outside bar, a large tail on the top and a large tail on the bottom. Not really worth buying, after 3 straight bear bars, and then a big bull bar on 14, heading back up to the bar 9 close, and then obviously a dramatic sell-off, 14 being a second leg from 10 through 12. This is just trading range price action. 14 might control, a piece of the rest of the day. It just depends on the follow through we get. And you get bar 15, a large, a bull bar with a humongous tail. We might have gotten a measure move down to 15. or 14. Yeah, so like I said yesterday, these surprise bars, like 7 yesterday, it got a measured move up, and this time, big surprise bar ends up getting a measured move down. 16 buyers below 15. You can see the close of 14, sell the close, disappointing 15, and traders buying back shorts. 17, a bull bar with a large tail on the top. I think we're going a little bit higher. It looks like the bottom of a trading range. So what leg is it? I don't know. It's a late leg though. So I'm not convinced we're going too much lower essentially. 18, a bear bar with a large tail on the top and the bottom. I think we might, again, if we go lower, we're not going that much lower. So I would just rather do nothing. 19, a big bull bar, a large tail on the top. And then 20 consecutive bull bars, 19 and 20. Probably going to get at least a small second leg up. You can buy the close of 20, expecting a little bit more to the upside. And then you obviously get a big follow through bar 21. I did buy the close of 21 today. It's the top of a trading range. I basically held all the way until bar 35, and then I used the rally on bar 35 to get out of the trade at break even. If I was smart, I would have scaled in at around 50%, maybe a little more, around 75%, and then tried to use the bounce to get out with a profit on my second entry, and a win on my first entry. But I was not all that smart today, specifically with that. I did also sell down here. I sold this close, and I probably should have exited above 64, but I held, and I ended up reversing like on the close of 70 or something. I was basically just hoping we were going to start a second leg, but the channel up was ultimately too tight, and it was looking like it was going to be an endless pullback. So I just reversed my position, and I exited up here somewhere, and so I just ended up break even. The whole day was basically break even. I took just basically the 2 trades. I actually did take another trade in here. I bought the close of 41, but it's the top of a trading range. It's really not that great. So once 44 happened, I just scalped out at break even. 22 consecutive bull bars, good for the bulls. I think we're going at least a little bit higher after 4 straight bull closes. 23, you can see buyers below 22, outside up. This qualifies as some sort of second leg, but odds are it's going to be more than just one bar as a second leg. 24, a bear bar closing near its low. Good for the bears. I think we go a little bit lower, but I'm not too sure how much lower. 25, consecutive bear bars. Should get a second leg, 24 and 25. So theoretically, scalpers might start to sell. 26, a bear bar, large tails on both sides. 27, 4-bar micro channel. But if you're selling here, you're selling against 19 through 22. So do you want to sell against 19 through 22? Not really. Is 24 through 27 stronger than 19 through 22? No, it's smaller and weaker in the middle of a trading range. So it's really not great to be adding on here. 28, a bull bar with a large tail on the top, and then follow through on 29. Good for the bulls. I mean, the bears should still get a second leg from the sell off to 27. So if you're a bear and you're calm, you can scale in here and expect that you get at least a test back down. 30, a bear bar, but a large tail on the bottom, and then a doji bar on 31. 32, a bear inside bar, a large tail on the bottom, probably buyers below, scaling in lower, and then 33, a triple bottom, 28, 31, 33. I don't think we're going too much lower. But bulls who have bought the bar bought and have a stop wherever they bought, they have a stop below bar 19, and they're probably going to get a second leg up. 34, big bull bar closing near its high. I expect us to go at least a little bit higher. This is a really strong close. And then we get consecutive bull bars, 34, 35, should get a second leg. 36, a bear bar closing near its low. I would imagine that, it's really not a very good sell because 34 and 35 are really strong bull bars. 36, you're selling the middle of a trading range. So I wouldn't do that. 37, a doji bar. Probably still going to get a second leg from 34 and 35. 38, a large tail on the top. We should still go higher. 39, an inside bar, a bull bar, a high one. Again, we should still get a second leg and go up above the bar 35 high. 40, another bull bar. So 3 straight bull bars, but really the edge is to the bar, 35 high. That's where we should get to. And the issue is that, the 3-bar micro channel starts at the high of the range. So that's not very good. 42, doji bar, disappointing follow through, and then more follow through. 43, good for the bulls. I expect we're going at least a little bit higher, but not a whole ton higher. And then an outside down bar on 44. It's 3 legs up. If you were watching 44, it was a bull bar for a little while, and then it failed really quickly and became a bear bar with a large tail on either side. And that was kind of a sign that bulls were giving up and not as interested as in holding onto the trade. And we were in more of a trading range. 45, disappointment, probably going to be a little more sideways here, tails on either side. And then 46, again, disappointment. Again, it really, at this point in the day, once you start seeing this, just stop trading. Just wait for a breakout. And if you don't get one, that's fine. I mean, you don't get a breakout every day. So I'm going to fast forward. It's pretty rare, though. It's like once a month, but you really just go sideways the whole day. And then it ends up obviously being a triangle. However you'd like to draw it. I think I drew it like this. But you can obviously still draw it like this. However, whatever works for you, really, that helps you see. I don't really care how you draw it. It really just matters that you see that there's a triangle. 59, 60, and 61. Obviously 3 bear bars, but 61 is extremely climactic. It's like 3 times the size of 60, so not all that great. 62, a bull bar, but a large tail on the top and the bottom, and then 63, an inside bar. If you've read, Al's books pretty, regularly, you would know that you have an II after a cell climax. When you get a cell climax, 59, 60, 61, and consecutive inside bars, 62, 63, sometimes, that'll just be a low and you can just buy above a bar like 63. So it's actually pretty credible to buy above 63 inside pattern after a cell climax. That used to be one of my favorite patterns. I don't think I've seen it in like 8 months though. So it's kind of interesting that we got one of those today. 64, big bull bar. You can buy above 64. You could have just waited for the follow through from 63, but I think bears get out of shorts above 64. 65 consecutive bull bars. We're probably going to go at least a little bit. We're going to get a second leg down, most likely from 59 through 61. But if this channel gets tight, it doesn't have to. And then 66, another bear bar, probably buyers below. But we might have to get back to the bar 61 close. 67, a doji bar, probably sellers somewhere above. And then 68, 69, 70. 68, 69 kind of changes the day. When you're looking at those, you're a bear, you need a reversal down pretty quickly to convince traders we're going to get a second leg. And we're not getting it. But the thing is, if this is going to be a rally, and if this bull trend's going to do anything, it should just get all bull bars. We shouldn't get a bear bar, because if there's urgency here and the bears are getting squeezed out of their shorts, then we should probably just continue higher, and nothing else should happen for the bears. So it's all by the close all the way up. You can buy closes and just look to get out below a bear bar, or 5 points below a bull bar, something like that. Because think about it, if we're going to get a big rally here, if we're going to get above the high of bar 59 or maybe the high of the day, we're probably not going to get a bear bar closing near its low again. That would be a loss of momentum, and there's no real reason why the bulls would lose momentum here. So traders are buying closes all the way up, taking a chance that we end up getting there. And obviously, and then we get obviously the second leg. You can argue this is the second leg, 79, and obviously there were buyers at the 67 low. So if you were fast and you're a courageous person, you could have put a stop or a limit order below 67, taking a chance that it doesn't get a measured move down of this whole spike before it bounces. But hard thing to do. For stop orders today, maybe 20, 21 stop for trading range, difficult. I'm just going to basically name the 3-bar micro channels, but I don't know if I would sell any of these. 27 was one, but I would not sell that. 34 probably is okay, but it's a trading range. What are you going to do? 40, 41 maybe, expecting a second leg up above this high, but it's not as good as it could be. And then you could sell the close of 60. I don't know if I would sell 59. I'd probably just wait, but you could sell the close of 60, a breakout bar, and just basically take a chance. This is what you have to have happen though. If you sell the close of 60 and 61 looks like a doji bar or something, I would probably just get out quickly, especially if it's a bull bar that needs a second leg. And then obviously massive bar, and then traders start taking profits, buy the close, 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 buy the close. As far as the daily chart, we have 3 bull bars. And probably going to get another leg up, but might pull back first. Most likely will pull back first. We're in the middle of a trading range. The weekly chart should get a second leg up, or we might be getting the second leg up. I think we're obviously going to get to a new high though. And then, I don't really need to go over the monthly chart so far. But yeah, that's basically it for this review.